Currency devaluation and inflation has the following effect. Say you're going to buy a coffee for $2 one day, in the future that coffee could cost say $2.50, or maybe even $1 billion. Let's have a look at some of the reasons why a country might want to devalue its own currency. One of the main reasons is to boost exports. So generally the more you devalue your own currency, the more exports you're going to have. Another reason could be to shrink trade deficits and to reduce sovereign debt burdens. The bottom line is they create uncertainty in global markets that can cause asset markets to fall or spur recessions. Countries might be tempted to enter a tit-for-tat currency war, devaluing their own currency back and forth in a race to the bottom. This can be a very dangerous and vicious cycle leading to much more harm than good. Currency devaluation is happening in our current era. China recently devalued its own currency, the yuan. Consider the situation that Zimbabwe is in. Zimbabwe recently had incredible inflation. I've seen a Zimbabwe banknote for $100 trillion. At one point in 2008, inflation reached a rate of 231 million%. It's crazy. The fact that a person can do this to a country should not be possible, in my opinion, and there is a way to make it impossible. As this article from The Economist says, hyperinflation is among the worst catastrophes that can befall an economy. It can destroy output and destabilize societies. The most concerning thing is the destabilization of societies. When societies are unstable, they are much more likely to have a war. In the 1920s, Germany experienced hyperinflation. It's interesting because around that time there was a World War II. It would make sense that this economic catastrophe played a major role in why we had World War II. Have a read of this. It is no coincidence that Adolf Hitler's inexorable rise to power began in November 1923, the high point of Germany's inflation. Hyperinflation occurs when new money is introduced into supply. One of the ways that can happen is with counterfeit money. Printers have only been getting better and cheaper, and they will continue to get better and cheaper. We even have 3D printers now. We also have physical money. If you have ever had a look at the dark web, you would find money for sale for less than what it's worth. You can literally buy money. The reason I'm mentioning all of this is that with Bitcoin, the number of Bitcoin in circulation is capped. It's impossible to increase. Hyperinflation is impossible with Bitcoin. My opinion is that the most important function of cryptocurrency is its potential to help the least fortunate people in the world. You don't need an account to use Bitcoin. You don't need to do any paperwork at a bank. All you need to do is download an app, which is your wallet. As soon as people have internet and access to smartphones, they can use digital cash. A good thing about cryptocurrency is it's extremely fast and cheap to send money overseas. What happens a lot is that you'll have someone from a poorer country going to a more developed country, and then they will send money back to their family. The process of sending money back is extremely expensive and it takes a really long time. This is happening on a really large scale. More than $430 billion was sent in remittance to developing countries in 2015. Using currency is an extremely efficient way for people to trade goods and services. It's basically a prerequisite for prosperity. The system works more efficiently when people specialize and then trade those goods and services. People don't have the same stability in their currency, and it's really important to have stability in a currency. There is a lot of corruption in a lot of developing nations. There's probably a lot of corruption in developed nations too. The thing about Bitcoin is it doesn't require the same amount of trust in the currency because no one is in charge of the currency. It's run by code. Cryptocurrencies definitely have a massive potential to help those most in need. These are companies listed on the Australian Stock Exchange. I've sorted them by market cap, where the highest market cap is at the top. The market cap is just the number of shares multiplied by the price of each share. It gives us an idea of the value of the company, and generally the more profit a company makes, the higher the market cap. The market cap also gives us an idea of how valuable people think a company will be in the future. If we have a look at the biggest company in Australia, it is the Commonwealth Bank, with a market cap of $137 billion, which makes it a very large and powerful company. The next biggest company is another bank, Westpac Banking Corp, with a market cap of $113 billion. The next biggest company is another bank, ANZ, with a market cap of $89 billion. The next one after that is another bank with a market cap of $87 billion. And finally we get to a mining company, BHP, with a market cap of $86 billion. The point here is the most valuable and profitable companies in Australia are the banks. Are Australia's banks too big for the nation's good? I think you could make a strong case for that argument. Australia's major banks delivered combined cash earnings of nearly $15 billion over the first half of their financial year. This article is from 2016. So where did the banks get all this money from? Well, Australians are paying them for essentially storing money and just moving it around. Australia's banks have assets of more than $4.1 trillion, including almost $2.6 trillion of outstanding loans. With Australia's annual GDP currently just over $1.6 trillion, that puts total bank assets at more than 2.5 times the size of the economy, and outstanding loans around 160% of GDP. Personally, I find it a little bit worrying that the banks can have so much power and can generate so much wealth. Banking is obviously extremely profitable, and that profit has to go somewhere. If we have a look at what the people at the top of the banks get paid, it's insane. As you can see, we're looking at multiple millions of dollars, and these values aren't even the full package. They're looking at over $10 million per year. It's hard for me to imagine how someone can work enough to produce that value. With a first year teacher's salary being about $65,000, that would mean that one person is doing the work of about 190 people. If you had $10 million, you probably wouldn't need to work for the rest of your life. You could invest that money and live off the interest. The thing we have to question is if this is a drain on society. Bitcoin by itself, right now, could not replace the banks. But cryptocurrencies, well, if they can't already replace the banks, they will soon be able to. This will free up a massive amount of human resources for other things. We have plenty of work to do. We just need to put the human resources in the right places. I'll give you a few examples. Education, healthcare, advances in science and technology, software development, infrastructure development. All these areas are in desperate need of more human resources. We don't need more human resources in banking. Money is not heavy. We just need to figure out how to automate all of this. As I said, I think cryptocurrencies will play a huge role in automating what the banks do, especially as they're getting upgraded, more powerful, and they can deal with more volume. There are basically two parameters that determine the price of an object, and those are supply and demand. If you have increasing supply and lower demand for an object, the price of that object will fall. If you have increasing demand and lower supply for the object, the price of that object will increase. So what makes money valuable? It's basically faith. Faith that this thing can be traded for goods and services. It's really important that we have money because without it we'd actually have to physically trade the objects, which would be much less efficient. There are some problems with this current system though, like who is controlling the money and is its supply being increased? And if you have increasing supply, believe it or not, tulips were once used as a store of value. It got so crazy that at one point, one tulip was traded for 2 grey horses, a carriage, a set of harnesses, and a whole bunch of currency. The thing is, eventually someone's going to wake up and realize that tulips just look pretty cool, and the supply of tulips can be increased pretty easily. There is no question about it. Diamonds look pretty cool. They're very sparkly and they have all these little rainbow colors in them. They're also pretty hard, so they're very valuable. The problem is, now we can create diamonds. So the supply of the diamonds is going to increase. When the supply increases with a stable demand or a decreasing demand, the price will fall. It's only going to be a matter of time until people realize the truth about diamonds. Why do we value gold? It is very shiny and it does have a nice color to it, but that is not the only reason we value gold. It has some very good properties. It has good resistance to corrosion and it's very good at conducting electricity. But that is not the reason it's incredibly valuable at the moment. If we have a look at how it's used, we can see that 50% of it is used in jewelry, 40% in investments, and only 10% in industry. You could make a pretty strong case that gold is incredibly overvalued at the moment. As a store of value, it's expensive and slow to transport, and its value is really dependent on fashion. There is also the question of whether the supply increases. Bitcoin might look very expensive at the moment. It's almost 10,000 Australian dollars per Bitcoin. If you multiply the number of Bitcoin by the price of each Bitcoin, you get $162 billion. That might sound like a lot of money. A lot of people don't realize that people aren't really trading in whole Bitcoin. Every Bitcoin can be split into 100 million different pieces, and each of those pieces is called a Satoshi. As of October 2017, 1 US cent was worth 171 Satoshi. The point is, you don't need to buy a whole Bitcoin. You can buy a fraction of a Bitcoin for a few dollars, which would be thousands of Satoshi. The amount of money on Earth is actually quite an abstract value. I saw estimates of $200 trillion, but let's use $75 trillion and let's see what Bitcoin is as a percentage of all the money on Earth. 162 billion as a percentage of 75 trillion is about 0.2%. This is an extremely small percentage of the total money on Earth. Personally, I don't see why Bitcoin couldn't be 5% of the money on Earth. But even if we're talking about it going from 0.2% to 2%, we're talking about it going from $10,000 per Bitcoin to $100,000 per Bitcoin. I think the reason people are actually confident to store value in Bitcoin is because it actually has limited supply. It can be used as a currency. It's fast and cost effective to transfer, accessible to anyone with the internet and a smartphone, and it's very secure using blockchain technology. At the end of the day, we have to store value in something.